Hello, this is the Untitled US Stocks, Futures, and Forex market preview for the week beginning Sunday the 17th of July, ending Friday the 22nd. Hope you had a good trading week. It was pretty slow. We didn't do a lot. It's summer doldrums. We actually won every trade. Everything should have been a green trade that you took, and we made a lot of money on the Russell if you were a futures trader on Friday, but a lot of the opening range trades didn't trigger right. We only had a few stock trades that triggered, but a green week because everything that we did trigger worked. So that's great. Here's a look at the dollar index daily chart. This is for the Forex stuff. Obviously, new highs as the dollar continues to get stronger. It looks like we might get almost a full point rate hike at the next Fed meeting. Now they're talking about based on the inflation numbers. Hard to slow this down though with everything that's going on in the world and the war in particular. Good article out there this weekend about how this is similar to World War I in terms of how the inflation process worked. But this time, of course, the global economy is much more integrated. So small issues with pieces and parts here and there can have big issues down the supply chain getting things done, and that's what's causing this. So you can't really get out of it. And that's where the Fed's stuck. Raising rates may not be the best answer, but inflation's not great either. So we don't really have a lot of solutions right now. Here's the euro dollar. It's the inverse of the dollar index. Basically sitting at parity, back to 1.0 against the dollar. Been a long time coming. The pound dollar, new lows again for the week here. Aussie dollar, also at basically lows, swept new lows. But by the way, if you really look at the last five candles here on the daily, it was really boring. I mean, none of these things moved much this week. Forex is in pure summer doldrums mode, so we're not going to spend too much time even talking about it. Here's the 30-minute candles on Forex, just so you can see. Here's the euro dollar, for example. High to low for the week is only about 100 pips, and high to low for the week on the pound dollar. Monday gave you a little bit of a move, but except for that initial move Monday to start the week out, you're looking at 170 pips from the pound, and that's not great, obviously. So it is what it is. I did want to mention we've got some new things coming as we start to talk about the stock side here. This week we're working on our new team that's going to be working with us in the future for the next several years, and we have a lot of new things we want to add to TradeSight. Very excited about it. We've been testing out some value area stuff related to individual stocks. We did post some of that on 5 key stocks into Twitter over the weekend, and we'll start to get everybody a chance to see how those play out. But I think it's going to be really interesting. We have a lot of other tools we're working on as well that'll be used, and the behind the scenes stuff. We'll provide you with those tools as we make the move to our new trading platform. But yeah, we're very excited about some of it, and I think you're going to find a lot of it even more useful, and you're going to redesign the course around that. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. So, again, not much, was hanging near the lows. We had a 13 buy signal in May. We bounced a little bit, came back down to test the risk line of that buy signal, held the risk line, and sitting flat. We're still near lows. Let's just be honest, that's where we're at. S&P cash gained 72.78 on Friday with the gap up. That was options expiration. And again, the same story there. Nasdaq 100 up 215.53, but still hanging near the lows. Both of these have held the pink risk lines from the 13 buy signals. The SOX up 66.85. Made new lows just 2 weeks ago. The biotech's up 70.56. This one's a little bit more ahead of the game, perhaps. Russell 2000 up 36.86, which is funny because we made a lot of money on the downside on Friday with a perfect setup and the first 5-minute candle with a 13 Comer sell signal set up against the pressure threshold heading into the gap, and a big winner there. Crude oil up $1.79, but still under 100, 97.57. So, we're hanging near the lows of the last 5 months or 6 months since the war started, which is interesting. On oil, we're not hanging near the lows on general prices out there. So it is interesting to see that we're down here again. Gold, on the other hand, up 70 cents, but again, back to lows. You start to talk about inflation, you expect gold to go up. A lot of people invest in gold for that. And instead, gold has completely reversed where it was when the war started. As it spiked to highs, everybody thought there was going to be a problem, and inflation kicking in, and then instead, gold goes completely the other way and back to lows for the year. Very interesting. A lot of people getting hammered in that market. Nasdaq Advanced Decline Ratio on Friday was plus 1495. Some more stocks up than down for expiration, plus 2026 on the New York. We've got Nasdaq volume at 4.3 billion shares. Now, the interesting thing about this, that's a low reading. We had low readings all week. We are in summer doldrums. That's why. Okay. But the interesting thing about this is that's as bad as it is with options expiration. I mean, usually you get some fake volume. That's what a lot of those big dots or those dots high up are. Obviously with triple expiration in June, you can see we had a huge day. Back in March, the same thing. But even when you look at January and February, those expirations are January and maybe May, right? Those expirations had a pop in volume. Nothing, no pop in volume for this. I mean, it's just truly amazing. But that's what summer often does. It's not uncommon. But we're sitting here at approaching the 10-day moving average at the lows of the year on NASDAQ volume. The VIX down 2.17, 24.23. The trend closes at 0.56. Again, it is amazing given everything that's going on in the world between the inflation, the war. There's still COVID issues out there. There are now whatever with monkeypox and whatever that is. I don't know, let's talk about baby formula. Let's talk about whatever. And yet the market is holding up fine and acting like there's no big deal. The VIX proceeds. There's no volatility. Really interesting to see this at this moment. The trend closes at 0.55, puts the 10-day moving average at 1.25. Apple up $1.70. This thing's kind of coming back quite a bit. Again, a 13 buy signal bounced off the risk line and held. Amazon up $2.92. Meta up $6.65, but that is still very near the lows. Google up 28.20. Again, this one trying to come back too. Apple and Google and Amazon going to crawl out of this. Goldman Sachs up $12.28. Doesn't look like anything on the chart, really. I mean, we're still so near the lows. Netflix up 14.33. Again, hard to look at that as like a big gain, but it is. I mean, percentage-wise, that's a big gain. And it held the risk line there as well. So all these stocks have held their risk lines. Peloton, now an $8.48 stock. I'm sorry, how high did this thing go? Yeah, 140 indeed. So, yeah, not a great investment at this point. TLT, the 20-year bond ETF, up 65 cents. But still hanging ish near the lows. Tesla up $5.26. Zoom closes up $2.50. And the VXX down 78 cents, but that's because the VIX was down, obviously. Bitcoin sitting around 21,000. The Dow gained 658 on the session. Now, let's go take a look at the intra-week action, and that means switching to 10-minute candles so we can see the whole week. And what you're going to find is that it wasn't very interesting. We gapped down on Monday. You can see last Friday on the far left, the close, we gapped down Monday, dead flat after the first 20 minutes. Dead flat Tuesday until late, and then we kind of slipped. Gap down Wednesday and came back, filled the gap, closed slightly negative. Gap down Thursday and crawled our way back, filled the gap, closed about even, and then gap up Friday, moved up for like an hour. And again, that was options expiration in the summer. And where did we close? We basically closed right where we opened the week. And we were down a little bit from the prior Friday, but where we opened the week is where we closed. So totally unexciting week, and I don't know what to tell you. Again, it's summer doldrums. Do not overtrade. I mean, if you can run 5 trades a week and make money on all of them or 4 of them or whatever, that's much better than trying to run 20 trades and make up a bunch of stuff, right? In terms of economic data this week, let's take a look. We don't have a holiday here in the U.S., I think, until Labor Day in September, the start of September. So we've got a month and a half of nothing going on summer-wise. There's just going to be summer, but there's no holidays. U.S. data in particular, NAHB Housing Market Index, tick long-term purchases at the close on Monday. Going into Tuesday, unemployment out of the UK, building permits and housing starts at 8:30 a.m. Eastern time here in the US. Nothing else. You got all the way to Wednesday with almost no data here in the US. We've got a lot of inflationary numbers, CPI out of the UK and Canada on Wednesday. We've got existing home sales at 10 a.m. here in the U.S. Crude oil inventories at 10:30. Again, those are minor. You go into Thursday, you got the Philly Fed Manufacturing Index and the unemployment. That's the weekly initial and continuing jobs claims numbers. You got a rate announcement out of Europe, but that's it. And then Friday, no real data out of the U.S. You got flash services and flash manufacturing PMI at 945. This might be the lightest week possible for this, but I will tell you that we're entering core earnings season here in the U.S. So we're going to be, and that, by the way, that's going to slow us down even more. Summer doldrums, light volume, not a lot of action, plus earnings coming out and everybody wanting to step aside and see what some of these numbers look like and what the guidance is. We'll talk about each of those each day, but it's going to slow things down even more. So, usually this is not the most exciting time of year for trading. People start to come back in August for everything but Forex because Europe goes on vacation in August. But stocks and options pick up usually around then, so we'll see what happens. So we're just be very cautious the next 2 weeks, and then we'll really get back to work. Looking forward to September and beyond, and I think this back end of this year is going to be really interesting. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week.